What's up, y'all? Today I'm going to talk about something a little topical. So you probably heard in the news a lot lately that there are going to be some government cutbacks, a lot of information out there. So a lot of different programs are being looked at, but the one I'm going to talk about today is the Consumer Financial Protection Bureau, otherwise known as the CFPB. So in general, the CFPB was created around 2008 to monitor a lot of different things in our financial world. It addresses things like overdraft fees and credit card interest rates and things that banks can do. But more importantly and more topical for me is it regulates mortgages. So around '08 and '09, there was a big change in the mortgage industry. And quite frankly, it was needed. There was a lot of loan products that were given to people who couldn't afford the loan or should have any business getting approved for it. So the creation of this company or this bureau really helped kind of regulate things and standardize the lending process. Now, I'm gonna give you my honest opinion on it. There's definitely some overreach on this bureau. It's a lot of compliance doesn't make sense on our end that you may never see on the consumer side, but it does serve a purpose of regulating mortgage companies so we all kind of play by the same rules. So what does this mean that the CFPB is potentially on the chopping block? We don't quite know yet. It's still unknown of what this really is going to pan out and what may or may not happen. But what I can tell you at Align Home Loans is that we're going to uphold the highest standards when it comes to mortgage approval and treating everyone fair and equally. As this develops, we will create more videos to address this situation, but I just wanted you to understand how the CFPB impacts me, which ultimately impacts you as a consumer. So a little bit more of what the CFPB does on the mortgage side, right? So things like the loan estimate must be sent 3 days after you're under contract. The things like the closing disclosure must be sent 3 days before you go to closing. If your interest rate changes or your fees go up, we're held regulated by that. So when we disclose something in the beginning, if a fee ends up being much higher, typically it falls back on the loan company that they have to eat the difference. So those are some of the good things that the CFPB does, and it does protect you. But like I mentioned, there is a lot of regulation with it. It kind of slows down the process some. Could it be modified a little bit? I think so. Does it serve a greater purpose? I do. So again, we don't know how this is going to shake out with the new administration of what they're going to do, but we'll keep you updated as we know more. But I just wanted you to hear it from me, your trusted loan officer, of what the CFPB is and my general thoughts on it. If you have any questions about it, certainly reach out. I'd be glad to talk in more detail. Until next time, take care.